Hi guys, this is Ray. This is going to be a video walkthrough on FCEL, a recent swing trade plan. We will go over the process part of things to start with, followed by the price and volume analysis, the point of entry for the stock, and then the position. So let's get started with the process itself. One of the first things that from a process point of view was FCEL made, again, the HDF Watchlist. HDF Watchlist is updated once a week on the weekends for stocks that meet the HDF candidates criteria, which is a 100% run up in 8 weeks. Once the scan is run, I go through each stock to see what the volume looks like, how the run of 100% in 8 weeks came about, and then FCEL makes it to the HDF watch list. One of the first things when doing that scan and flipping through, I'm always looking at, so the volume on the run up in this case was pretty spectacular. As price moves up with high closing ranges, we see volume upwards of around 100 million, 150 million, 200 million on a single session. That tells you there's a lot of interest in this name on this move up. And this is immense volume across the board. So large rise in volume, high closing ranges to go with it. That's important. If the action over here on the rise up with increasing price, increasing volume with low closing ranges, that would have been a minus. But in this particular case, as price was moving up, it was closing near the session highs on days where the volume was really high. So after that, once it makes it to the watch list, we're watching for consolidation, some sort of, area that we could define our risk at. The second part of the process on why this particular name caught my eye is that it's part of that whole renewable EV space theme that the market is, a lot of stocks in that space are increasing at a fairly fast clip. So we have the group behind us for such a move, or for, when we picked up this particular name of the swing trade plan, the group was really hot. So you're basically stacking evidence at that point to see, you have the group behind you, you have the markets, at this point they're in a strong confirmed uptrend, and then the third thing was it came about when the HDF watch list, right now it's in the ecosystem of stocks that we're looking at, and then 4, in this particular case, the IOF and the IBT markets, which is the institutional options flow market and the institutional block trade markets, were fairly strong on this name. So I'll pull that in here. So this particular chart, if you have access to the money flow data under the all access membership or the TL money flow side of things, is so FCEL saw at $9.30 a block trade of about 1.5 million shares. So that tells you, that is not a retail buy. This was a single block trade buy. Well, it's incorrect to say buy and sell, but it was a single block trade at the $9.30 mark on this particular stock. That just says that from an institutional block trade market, this name was active in this range. The second thing that was interesting from a money flow point of view for this name was that the options flow market was fairly active. So when the name was pulling in on this particular date, that is when it respected the $1.10 mark. We'll cover that in a few here, but the options flow market, if you look at it from an aggregate point of view, there was bullish premium, and that basically puts a timer on the stock to either get up or zip down. So there was going to be there was going to be some sort of directional move associated with it. We could see IOF coming in early here on an aggregate basis of about 200,000, but then we really get that large bet. This is sort of mixed action, but it still shows you that the option flow market was also active, in addition to the block trade market being active in the $9.30 range, with about 1.5 million shares being traded there. So from a process point of view, those things all played their own parts, right? The market being strong, being part of a group or a theme that was, the market. There's a lot of volume here and a lot of interest in the group itself that caused this sort of price action. The IOF markets, and then it makes it to the HDF watch list and the ecosystem of stocks that we would look at on a daily basis. This one was it's a fairly fast mover, so from an expectation point of view, I wasn't expecting this to just go up and away from the $1.10 mark. The plan coming in was to watch for respect versus the $1.10 into the end of the week. So the expectation was this was going to sort of do this and sort of base above the $1.10 mark and see how it acts, right? See if we get RS days, if you watch the prior videos, or some sort of, so we could pile on our evidence as it consolidates. But given that the market was fairly strong, the stock sort of opens lower and closes green on this particular day, and it respects the $1.10 mark. So that came in after price was retracing this green zone that we've highlighted is on below average volume. So that is a positive. Price is sort of retracing on decrease in volume. Part of it was also like the holiday volume range, but still this one was a fairly quick one. The key here was the options flow market was also active, so that would tell you that it was going to get directional up or directional down fairly quickly here. And also the block trade market was active, so there was some sort of institutional or non-retail activity right underneath in this zone, which made $1.10 an area to watch. So the price dips up, and that's really the only entry point that was well defined with risk. Price moves fairly quickly and it doubles. So this stock went from 10 to 20 in 1, 2, 3, 4, 5, 6 days. So, and then again, increasing price followed by above average volume. That is constructive action. There was no reason to doubt this sort of move. So it came from the 20 area back to the 15. So one thing that caught my eye was it reported earnings in this area, and I believe it was this particular day it reported earnings, and it held the 15 mark. So 15 was a database number that we've been watching, and it was threaded out on the Twitter threads as an update post earnings. So the fact that the stock is holding the gauge after a earnings catalyst was a positive in and of itself. That shows you that price is being held closely. There's again some sort of interest to hold price above that gauge even after earnings, and then we get another rally post earnings as the market remains really, really strong. There's a group theme behind it. There's the IOF markets that were active behind it. There was the institutional block trade market that was behind it. There was all of this volume that came from 100 million, 150 million, 200 million on this, and that energy is just being released where all forces in the markets, from an IOF point of view, IBT point of view, it's a potential leadership group, which is a PLG. The market itself is in a strong uptrend. So all of these forces, when they combine at once, right, we're sort of stacking evidence, right? All these forces coming together results in volume on the charts that moves price from 10 to 20 to now 30 bucks. So let's cover point. So we covered point of entry. Now we could quickly cover position management. Position management. So once, this was really a quick entry. There was no, sideways here. It just zipped up. So position management point of view is if you position in the stock with respect to 10 and 10 was your risk, the fact that it doubles in about 6 days, which is not the normal, price action that all stocks exhibit. This one just happens to be a fairly special one. Once it doubles, the eyes really just remain on the 21 day and see how long, the stock's basically been holding this lime green, which is the 10 DMA, and it hasn't really broken the 10 DMA whatsoever yet. But at some point, it will break the 10 DMA, and then the 21 DMA will be of interest to see how it acts. Again, with market in mind, with market context in mind as well. Maybe, bases here or bases above the $1.20 mark comes here, bases a little bit. And it all depends on what the market environment is. If we get into some sort of correction within the markets, then you have to adjust your thought processes accordingly. But of initial interest, we have the 10 DMA, which has been holding. Once it breaks a 10 DMA, you reevaluate. If you're positioned from here, you're about, you're up 20 points, right? So you could be a little bit more patient with it. So when it comes and retraces, maybe see how it acts at the 21 DMA, see where the market's at when it's at the 21 DMA, and take it from there. So just a quick recap. These are forces in the market coming together to create this sort of crazy momentum. Now, this is not your top fundamental, top institutional increasing fund ownership type of name. This is sort of what I would call a performance booster. Performance booster is you have your core positions in your portfolio, right? That's your 1, 2, 3, 4 top 5 names. Those are names like Pins, Snap, Net, right? CELH, those maybe NVIDIA type or AMD type. Those are your core type names. So you build your portfolio with solid core positions when the market is, trends about to change. When market's near follow through days over here, right? When your trends are about to change, that's when you're building your core. But once you have your core in place, you can surround your core with what I call performance boosters, which are more, theme-based, database names. Those could be your 6, 7, 8, 9, 10 if you're going for 10 positions in your portfolio. And then that would make your entire portfolio where your core would be the bulk of percentages invested, and then you could surround them with performance boosters in the markets like FCEL to get more, to make larger progress in the markets while your cores, say, for example, are basing, right? Something like an FCEL really can boost your performance based on the data that we have and the evidence that we have in place. We covered process, HDF Watchlist. We covered the IOF, IBT markets, how they contributed, the price and volume action, the point of entry, which was basically the $1.10 mark, which was fairly quick, and then we don't see much consolidation. It was just continuation. Position management, the 10 DMA is of interest to see how it acts. It's still holding the 10. The 21 DMA will be of eventual interest if it retraces, and see how the volume is at that point. So we'll leave it there.